evening, and here's wishing a very happy Diwali to all of our viewers who stood by us in the year gone by and who keep standing with us and making us the #1 business news channel year after year. Here's wishing all of you guys and your entire families a very happy Diwali, and happy Diwali to both of you as well. It's been many years of celebrating Diwali together.
And one thing never changes, which is on the Diwali day, Asha always looks stunning.
Thank you guys.
Yeah, I can almost second that compliment.
Yeah, and you guys look dapper as well, I must say. Did you know that Nikunj has designed his clothes himself?
No, just
Did
happen
you know
to
that
sketch a
hidden
bit.
talent?
I want to end this conversation right now.
Just happen to sketch a line a bit.
But coming back to, well, what the year gone by has been like. And really, you know, we've just been through so much. We've been through Brexit. We've been through a slowdown in China. We've been through a commodity slowdown and then just a bit of rebound really coming in from there. And back home as well, we've been through a new RBI governor at the helm. You've had earnings actually slow down, commodities rebound. Sectorally, it's actually metals which have been the best performer year to date. So yes, lots has gone by while we're still waiting for a full-fledged earnings recovery. Interest rates are only coming down, but there still seems to be a lot left on the table in terms of what we need to hear from the government. GST, while you know it's definitely going to see the light of the day, it's still not a reality.
See, in any Samvat year, you will always get good news and bad news, some planned event and some unplanned events, some sharp reactions and some silly market moves. In my book, if I recap the Samvat year gone by, it's been a good year for equities in general, for Indian markets and global markets. Despite odds, Nifty I think has done about 8-9%, which frankly is not bad, and large part of the price action was concentrated in small and mid-cap stocks. So that's the market view, both in terms of positioning, both in terms of direction. So I think the Samvat year gone by really was not a volatile Samvat year. It was a year which was largely dominated by bulls. The list of stocks which are a 52-week high was a positive one. We had real ugly news at the beginning of the year. We had real ugly news, you know, from global markets. But yet markets still did rather well, both local and global markets. So if I have to, let's say, summarize the Samvat year gone by in one line, it has to be the markets have managed to climb the wall of worry.
They sure have.
They sure have. And there has been some unexpected things that have happened on equity markets as well, right? I mean, who thought last somewhat that the two spaces which will give blockbuster returns would be metals and would be oil and gas? And by oil and gas, I just don't mean BPHP, IOC. I mean, we just scan through the list, it's going on. I mean, stocks like GAIL have given 56% returns. It's amongst the top 5 stocks that have given returns on the Nifty. IGL, Petronet, LNG, over 80% returns. So that's been the story, right? The unexpected ones have made a move and made a stunning move and given superb returns. So the question is, what is it that as of now is unexpected, and if that can give the returns in the next year? Because that's what we'll aim to do today, right? Try and identify and give our viewers the Samvat idea, something that they can invest in today for the next Samvat.
And we've got a league of extraordinary gentlemen joining in to tell us exactly how Samvat 2073 is going to pan out. The who's who really on D Street and the global street joining us today for this very special Diwali day. There you go. You've got the biggest of them all, Rakesh Jhunjhunwala, Mark Mobius, Shankar Sharma, Sameer Arora, Ramesh Damani, Atul Suri, Manish Gunwani, Nilesh Shah, all joining in to tell us how the year gone by is going to look like.
So by the way, while we talk about what equities will do or can do in the year ahead or in the Samvat ahead, one key thing, and Aisha, you know, that's what people say, Indian women need to be complimented for their acumen when it comes to accumulating gold. Gold has given 17% returns last Samvat to this Samvat in dollar terms. In rupee terms, 16.77%, which is quite extraordinary. It's better than the Nifty and the Sensex. And that's where I think, sorry?
No, I was just going to say, oh, you want to catch my intuition, right? No, I was just going to say that it's got to do also with the fear factors that were playing out, right?
Sure.
It was almost like the world's going to come to an end with Brexit. A lot of heightened uncertainty ahead of the US presidential elections and then the Fed rate hike. So I think it's just a factor of that.
It's just been one of the years where you cannot connect the dots. You know, normally it's very easy for us to pinpoint these historical correlation. Strength in gold means there is problem in the world. If there is weakness in the dollar index, then there is going to be a rally in emerging markets. So commodities made a comeback. Gold actually gave you an extraordinary move. in general, equities have done rather well, both local and global equity markets. It's not that we've got a negative tick. Emerging markets made a very strong comeback. And despite the odds, we've seen a sell-off in the bond market. So for me, I guess the big realization has been that there is a lot of confusion and there is a lot of chaos, and the historical correlations actually have got disjointed. I mean, if you really ask me that which was the most common term which we used in our newsroom in the Samvat year gone by, it was liquidity. Yeah. So everyone thought, look, there is plenty of money, central bank will ensure that there is all the problems in the world will be taken care of. So that was like a consensus and a very popular trade. Will that popular trade roll over to this Samvat year? That is, I think, the debatable point, and that is, I think, we should debate.
Yeah, indeed. In fact, let's get on board Darshan as well. He's been waiting by at the research desk to really analyze what asset classes have actually given returns in the year gone by and what's likely to do well in Samvat 2073. Darshan, a very happy Diwali to you and the entire team. Tell us what's done best.
Well, happy Diwali to you, Aisha, Nikunj, Neeraj and all our viewers. Basically, if you invested money in most of the asset class, they would have given money. The Nifty is giving you positive returns, 10%. The Sensex is up 8%. But it's the broader markets that have done well. Because if you see, even lately, it's not, the market is not moving. The Nifty has been very, very range bound. Probably it's been managed by one stock going up, one stock going down. But the broader market, individually, some of the counters have managed to double. Even gold is up almost 16%, as Neeraj pointed out. So gold has outperformed the benchmark Nifty. Crude has managed to bounce back. It's up almost 15%. The rupee has depreciated almost 1% against the dollar. So clearly, if you wanted to make money, you would have to put your money into the mid caps and small cap space, or probably gold or crude. That is why you would have made money. But the metal space did extremely well. The Nifty metal is up 57%, and Tata Steel and Hindalco are up 88%. So it's the strength coming in from these two counters. Media, oil and gas, real estate doing well, auto, private banks up 20%, so that outperformed the Nifty. The Nifty FMCG, PSU banks underperformed, Pharma and IT. IT index was down almost 11%, Tech and Wipro down almost 16%. So Pharma and IT were not the spaces to be in, and the high beta counters managed to do extremely well as far as the entire Samvat was concerned.
Right, Darshan, fantastic analysis, and I guess somewhere in the Samvat year gone by, if you were an investor in the bond market, in the commodity market, in the equity market, you've made money. I mean, the only investors who are feeling slightly, left out are fixed deposit investors. They're not investors, I mean fixed deposit savers, let me put it this way, because interest rates have come down. Now, will this Samvat year be that kind of an extraordinary where volatility will be low and liquidity will take care of all the pains in the world? I have my doubts. So now to rather than analyzing what has happened to the Samvat year gone by, I think we should be focusing on what really lies ahead. And my sense is that small and mid-cap stocks, Neeraj, Aisha, look at the force which small and mid-cap stocks have moved in last 2 years. So the small cap and the mid-cap indices, they're up by about 95 to 100%. Sensex and Nifty during that same period, they've gone up by 30%. So that's the bull market. But will that bull market really accelerate? My answer to that is no. I mean, frankly, if you ask me, the risk to this market is what's going on in the mid-cap mania. Earnings are not there. Valuations are looking sticky. Just about everybody has a stock opinion now, and everybody you speak to on these street has an idea on which is next stock to move. So that is the risky part of this market right now, the mania in the small and the mid cap stocks.
However, what we do every Samvat is try and still tell you, give you the best advice, what stocks that you can still invest in despite the risks, despite the headwinds that might be there. By the way, keep an eye out on your screen, because we are getting you 73 trading RDIs. It's Samvat 2073, and today in this session we will give you 73 trading ideas, or 73 investment ideas if you will, and all of these are running on your screen right now. But let's get in our technical experts on board to speak about how are they assessing the risk and the reward that is related in the market in the near term and over the Samvat 2073. Dr. C.K. Narayan, Siddharth Bhamre and Kunal Bothra with their sense of the charts and the derivative positions. Gentlemen, thank you so much for joining in, all of you. CK, a very happy Diwali to you. Do you think that as happy as this Diwali is, the same will be true for Samvat 2073 as well, from an equity markets perspective?
At the outset, a very happy Diwali to all of you as well as to all our viewers. And we can look forward to, I think, a fairly decent year, maybe not as, let's say, strongly trended as 2016 was, because if you saw the movement from February through till about August, September, we had a very, very powerful drive as far as the indices were concerned, where they improved 2,000 points. I think in the year ahead, we might actually see the market consolidating these gains. And so I don't believe we are going to have any serious dips in the market, but yes, there will be periodic pullbacks which will all offer us some chances to buy in. My expectation is that the attention of the market is going to shift into a lot of mid-cap non-index names, as a result of which I think the movement in the indices could be a little bit subdued, and we may not have any great gains being made by the index, but I do believe that the action or activity in the market as a whole should be quite substantial and keep everybody happy, because I think particularly the retail trade, they are extremely happy when small cap, mid cap stocks are in great deal of action, and that is my expectation across for somewhat 2073.
Kunal, hi, good evening, and here's wishing you a very happy Diwali, the first with ET Now.
Yes, Aisha, the first with ET Now, and I hope that much more to go going forward. A very happy Diwali to you, Neeraj, Nikunj, and I think all the viewers of ET Now. I think coming on the markets, CK sir mentioned very good point over there that last year was more of a what you call as a turbulent year. I think we in the first, I think post Diwali, post that Samvat 2072, which was in November, we've had 1 or 2 months of sort of cool and calm for the markets. Start of 2016 was extremely turbulent, and from there on, I think the markets have picked up trajectory. Now, I think going forward for the next 1 year at least, I believe that the markets, maybe even if volatility kicks in, maybe for the next couple of months again, I think the trend should not get damaged or should not get impacted significantly, provided there is status quo of the kind of global events we are actually looking at. But yes, I think looking at technical charts, I heard Nikunj saying that a lot of mid caps are still buzzing quite well. I think a lot of retailers, they are now talking of many mid cap names. But in terms of stocks, really, I think if I look at the charts for many of these mid caps and maybe emerging small cap names, I think there are a lot of stocks which are still untapped, and they are showing some exceedingly high potential of a strong breakout. And some of them we've already discussed in our somewhat 2073 picks as well. So I believe that maybe if you try and pick your stocks quite wisely, I think the rewards could be outstanding for the next 1 year as well. And let's hope that the indices continue the uptrend which they have been showing for the last 9 months.
72 ideas and one more is coming. So the attempt here is that we will get you 73 somewhat ideas, and pretty much the entire range from Shankar Sharma to Hiren Ved to what some of the marquee brokerages are saying. And on top of that, we also are getting you some trading ideas for the day, for the month, for the week from a technical expert. Siddharth Bambre, good evening. Hello, happy Diwali.
Happy Diwali, Nikunj, Aisha, Neeraj, and everybody who's watching this channel and everybody who's making this channel run. Happy Diwali.
So what could be that Muhurat idea? Normally if you talk to people associated with stock market, the consensus, the chorus question on the Samvat day, on the Muhurat day is that Muhurat mein kya lene ka?
It's very subjective. Some people feel that you should buy because it's an auspicious day and something should come into your Demat account, and some people think that you should sell because you need some money to come into your account. So it's very subjective. It is an auspicious day and auspicious hour of trading, but practically if you see this day from a trading perspective, from a market direction perspective, doesn't matter much. But purely from from the tradition perspective, I believe market should be in lull. Hardly you have seen in Mahurat trading that market has given you significant upside or downside move. There would be a token upside move today. I don't think so. From intraday perspective, you should have anything today. But looking at what is happening in our market, I think don't expect this next 1 year to be very substantially high or very one-sided market. I think we would be in a market which would have a positive bias, but then on and off pressure on liquidity, which I believe one of the phase of low liquidity is what we are going through now, will ensure that market doesn't have a runaway rally. So I agree to what CK sir and Kunal and I'm sure others would also point out that it would become a more stock specific approach, And then, if you want to take an index call, then you have to wait for, some dips to happen rather than, buying index on a breakout, you should buy on a dip. So I won't take a view of 1 year in this market. I will stick to, what I'm good at it, probably from a trading perspective, 1 month, 2 month, 3 month. Beyond 3 month, I won't take views.
Sure.
And that is suggesting that be stock specific right now.
Okay. It paid to be stock specific for sure. Excuse me.
Yeah, it did. It surely did pay to be stock specific, and stock specific it is going to be. So let's bring on board our entire research team. They as well are here to join in with this Diwali celebrations and talk about the individual stocks which have been the firecrackers in the year gone by and what's likely to do well in the year ahead. Firstly, a very happy Diwali to all of you guys. Ajay, let me start off with you in order of seniority.
It's
HPCL.
Age.
I was just being diplomatic.
I think Nikunj is fixated with that word past 3-4 days in every show, in Manish Shokani's show, everywhere he's pulling people's leg after the age thing.
For me, I'm nearing 40, so the realization has dawned in.
That is understandable, Nikunj. Okay, let's talk about
Smart retort, I say.
Oh my God.
Okay, let's talk about
But
the
Ajay, yeah, let's
cracker
talk about
stocks which have been from my sector. HPCL, I mean, we've been talking about oil marketing companies for some time now, but this particular stock from the oil and gas space has clearly stood out, towering above others. Any period you take into account, almost 10-year, 1 month basis, 15-20% on a 3-month basis. So it's also a F&O guy's delight, because on every big crash, people get into this one because it rebounds very well. Of course, on a portfolio basis, it has almost doubled. Of course, it has, deregulation has worked in its favor. But as Neeraj and I were discussing with the management last week, not only deregulation, but the volume growth at HPCL has actually been the big trigger. GRMs, of course, are very volatile, but almost 2/3 of the business have now become, not very correlated with GRM, and that is the big re-rating which has happened. And by the looks of it, the way volumes are growing, India has become the highest, growing fuel products market. HPCL, it will be interesting to see how it goes. At least the management commentary is extremely confident.
Okay, thanks a lot for that, Ajay. So that's for HPCL, arguably the oil and gas stock of the last Samvat, and some triggers for HPCL for the year, for the Samvat ahead as well. Mubina and Tanya, just stay on for a moment. I think we're perilously close to the pre-open rates as well, a minute and a half, and we'll continue this discussion post the pre-open rates are open as well. But a minute and a half, and guys, let's do this. A 500 rupee wager on what does well in the new Samvat. Nifty, mid-cap, small cap, you can choose. Nikunj, I'll give the first option to Aisha.
Don't even have a disclaimer here, a proper one.
It's a 500 rupee wager, nothing else.
I think Nikunj and I are on the same stock.
She's assuming that you are on the same. No, I'm asking about the index. Whether you think the small cap, the mid cap, or the Sensex Nifty.
Nifty.
So 3 indices. You are betting on the Nifty or the Sensex. Nikunj?
No, I think my sense is that in next 12 months, the index will make a new high. Now, typically when the index makes a new high, it could change the dynamics. It could change the dynamics. No, I mean, that's a view.
So
because I'm not sure.
Yeah, but
I'm not being diplomatic, but I'm not sure. If Nifty touches a new high, you may not see a crack in small and mid-cap stocks. If you see an earnings recovery, 1 or 2 stocks in the mid-cap and small-cap indices may the index look better. Sometimes you were sure.
But if you position the right way, you could make more money on the index stocks as opposed to the.
So let me put it this way. I mean, for an average retail viewer, index is the way to go. Whether it is in Nifty ETF or next Samvat.
okay.
And
So let's say Nikunj chooses the Sensex, you choose the Nifty, and I'm choosing the small cap index this Samvat to next Samvat. We'll talk again the next year when the rates are on. But anyways, 19 seconds to the pre-open session. Let's do, I mean, the setup really is nothing, so to say. It's all an auspicious trade, and I think we'll get to see a lot of stocks flying around as well, maybe from the broader end of the spectrum once the pre-open rates start. Typically, remember, the market tends to come off a little bit in the second half of the Muhurat trading session. So if you are an active trader who wants to take an advantage of a trade even in this session, that might be a good idea or a good key point to watch out for. But here are the first rates. The pre-open rates will just come up on your screen in moments from now, and the Nifty starts off on an erratic 1.1% rate. I don't think that will happen. Keep that in mind. But specific stocks that you need to focus on or that are moving around in the first few ticks. I think State Bank of India, ONGC, some banks are actually flying high. Asian Paints has this unnatural 5.5% uptick. I don't think that will hold true. Maruti Suzuki, if indeed it does what the pre-open rates are suggesting, could well be very, very close to the 6,000 mark as well. So very, very interesting. Watch out for banks. and watch out for the broader end of the spectrum. I think that could be very active. But the first couple of minutes of the pre-open Muhurat trading session, not at all disappointing. We have over a 0.5% gain. The Sensex is actually up 0.8%, which is not a bad thing at all.
Yep, not bad considering these are just token rates. 86.90, not bad at all. ICICI Bank, that's the one which is charging ahead. You've also got an Eicher Motors, and we were just talking about as to how this is the one expensive stock, so to speak, which has made money for investors in the year gone by. You've got even Tata names out there. Tata Steel is in the green right now, Tata Motors. So much like what we saw in Friday's session, after 3 consecutive days of it getting completely hammered, the entire Tata group of names, you saw some bit of rebound come in Friday's session, and today too you're seeing some green. Infi is holding out, SBI is holding out, Bajaj Auto is looking good, Reliance, Maruti, it's all in the green. What's in the red then? Bosch, TCS. TCS has now been in the red now for the last almost 5 consecutive days. You've got a Z. And Lupin, the stock that we were actually going to bet on, you didn't ask us of different individual stocks. That's the one which is in the red.
No, you actually may very well see some comeback in pharma and a large comeback in IT. Let's be real. For pharmaceuticals, the news flow is not going to get worse than this. There is nothing worse than an import ban or a 483 observation. It's only going to improve in the course of next 12 months. IT, if at all, if things stabilize, these companies may really spring in a surprise as far as the outsourcing part is concerned. Can you say the same for consumer names? Can you say the same for metals? Can you say the same for energy? The answer to that is absolutely no. Now, what has worked in last couple of years, or at least in last 12 months, is that quality at any price, whether it's Eicher Motors or Asian Paints. I don't think that conversation, that narrative is going to work. This year, I think you will see a change in market leadership. For example, in last 3 months, ICICI Bank is doing much better than HDFC Bank. You actually are getting a sense that market leadership is changing. What I'm slightly confused on, and we'll go to Sanjay on this one, is that what happens to these so-called small sectors? Every 3-4 weeks we discuss a new sector. Sometimes it's chemicals, sometimes it is NBFCs, sometimes it is textile or branded players, trials. What happens there? I mean, that kind of an euphoria what we've seen is not going to continue this year.
I think it will be very, very bottom up, quite frankly. And just before we get in, Sanjay, in the discussion, and Sanjay, just come to you in a moment. But I think Tanya and Mubina are also with us to talk about those other 2 spaces or stocks and the hot stocks in their respective sectors and how they have done. And just quickly go to them as well. Mubina, to you, nobody thought that metals will give the returns that they did. Now bring us the stock that you're speaking about.
Oh yeah, absolutely. Metals has clearly stolen the show in 2072 Samvat. So no surprises really that it's a stock that is exposed to majority of the base metals. Vedanta, that has of course been the big performer last time. In fact, after slumping to a 7-year low in February, it has been able to bounce back almost 200% or more than 200% in the last just about 8 months. Now, why the surge? Like I pointed out, base metal prices themselves have seen quite a bit of a comeback, really, be it aluminium, especially zinc, of course, in which Vedanta is very favorably positioned. That as well has seen a very strong comeback. China is something that has, of course, kind of put a clamp on the overproduction and oversupply that has been a reason for the rally. And of course, there's also this interesting volume growth story that Vedanta is playing out across most of these businesses, be it aluminium, be it iron ore, of course, in which it's recently going to work on its Goa operations. The capex plans are, of course, going to be volume growth drivers going forward as well. But analysts are worried maybe is Vedanta a little too shiny, because there has been a significant share price rally, and that has discounted the Vedanta Kane merger, which is of course going to simplify the company structure. It may have even discounted the commodity rally, but nevertheless, compared to other global peers, many say that this is still fairly priced.
Okay. Sanjay Dutt, good evening, happy Diwali, thank you for joining us. I guess whatever conversations we are having about market, the risk factor, the concerns, the color of your kurta is telling me that, boy, you're really bullish. I mean, it's a green, bold green color.
Before I start, Nikunj, with humility, would like to bow in front of every individual viewer, you all, on this auspicious day. I think more than that, market teaches us humility. What we all had views on when the new government came in and we touched new highs, and we all thought by this Samvat we'd probably be at 10,000 or 12,000, but we are still struggling to cross 9,000. With that little bit of a Diwali sermon, that we move on. I think things are going to be much better than what we've seen in the last 1 year. And I was just hearing your discussion between Aisha, Ayu and the team. that, what are you betting on, small cap, mid cap index or the Nifty? And, I have definitely a bias towards you, being an old friend, much before the ET days, and of course Aisha also. I will go with the Nifty, and I think this is the time to load up to large caps, because in some areas the small cap and the mid cap trade is turning crowded. Things are going to look really good for companies which have positioned themselves, particularly large cap companies. Earnings are going to turn now. We are seeing early signs. Metals, one of your analysts was discussing right now. Within that, steel looks very exciting. So all in all, I think we're in for a good period, and I think Nifty would definitely be the right place to be. Select 50 stocks would be the right place to be in the next year or so.
Well, Neeraj, change of plan?
No,
you
not
think
at
you
all.
want to bet on something else, considering Sanjay is supporting Nikunj and me in our bet?
Yeah, no, it'll be
Nifty
interesting.
it'll be.
Yeah, so Nikunj
See,
is
if the
bet on
cycle turns,
Sensex,
my
remember. You
limited
can't bet
point,
on the same index.
my limited
No,
point is
I've
that
already got Sanjay that's supporting me. so.
my limited point is that if the cycle is turning, the cycle will turn first for large cap stocks. It will never turn for mid cap stocks. And if you look at mid cap stocks right now, the flows in the small and mid cap stocks have been so strong that there is a lot of momentum in mania in the small cap stocks. If you right now buy small cap stocks, what is the P multiple and what could be exist P multiple versus the underlying support? There are two factors which really matter, frankly. There's no rocket science: liquidity and valuations or earnings. Liquidity is okay, but valuations and earning in small cap stocks are not on your side. There is something called margin and safety and risk reward ratio that I can do a wager anytime is not supportive. That's my limited point.
But, so Sanjay, the reason why I'm a minority, and firstly, wish you a very happy Diwali and a prosperous New Year as well in advance, Sanjay. But the reason I'm putting my wager still after 2 years of outperformance on the small caps is the strength of the domestic flows. Somehow, the feeling that I get is by virtue of the kind of money that is flowing into PMS schemes and in small cap, mid cap mutual funds, at any given large correction, there is a lot of money flowing into these because there are only as many people who can buy an Asian Paints at 45-50 PE. Then money will flow into some of the others.
I'm not saying that small caps and mid caps will not outperform or will not do well selectively. They will be leaders there. There will be opportunities there. There will be absolutely multi-baggers there. There's no doubt about it. But I think, Neeraj, is an important point that you need to factor into what your hypothesis now, and that is that nothing can actually trump the flows from overseas. If you go back last year or two and see the other emerging markets like Brazil, Russia, etc., the way they've aggressively outperformed, the indices have outperformed, is primarily because the kind of big money that has moved into these countries from the real lows. And I think that's the tidal wave of money that's now going to come into India. And that money obviously comes into one, large caps, and second, what Nikunj correctly pointed out, valuation. It's very difficult for a large investor, a large sovereign fund, or a large $20-30 billion or $50 billion fund sitting in New York or sitting somewhere in UK to actually put in a big ticket investment into a small cap or a mid cap. So he's going to obviously go and bet on the bigger stories, on the bigger story that's the big story of India. I think so. My entire hypothesis is totally backed on the fact that the kind of flows that are going to come from overseas in the next 6 to 12 months is going to really trump the domestic flows. Yes, domestic flows will be a source of strength, no doubt about it, as they have been in the last year or so. But foreign flows in domestic equities, in Indian equities, are going to be much larger than what we've seen in the last year or two.
Sanjay, a very happy Diwali, and only a Delhiite supports another Delhiite. Both of us betting on the Nifty. But tell us, what do you do with the small
over
caps?
10 years in Bombay now?
I'm still a Delhiite.
Tell me about it.
Okay, but yeah, coming back to it. Come on, Nikunj. The infrastructure, the food, quality of living, really.
Try to go from Noida to Gurgaon, trust me. It's much better than going from our office to Kandivali. Sanjay Dutt, when was the last time you traveled from Noida to Gurgaon? It's 3.5 hours.
You've got the Delhi Metro. It's one of the cleanest.
Yeah.
Sanjay, sorry, you were saying?
I said I agree with you. Delhi traffic is a real challenge, and infrastructure here is collapsing as much as probably or worse than Bombay. So Nikunj is right there. Delhi's been quite a struggle last few months.
Okay, I'm in a spot here, but let's get back to markets then. Sanjay, what about the broader markets? You know, we were just chatting about this entire year has been about NBFC, specialty chemicals, tires. Is it time now to make a rethink? Perhaps these sectors and stocks are not going to do all that well? Or do you think because the tide is riding high, there is no need to, correct it if it ain't broken?
No, Aisha, what I'm trying to say is that, as a retail investor, as well as an institutional investor, now the trade will move to the larger caps, definitely, because, the uptick in earnings, the interest costs that are going to come down in India, barring, of course, the blip that you may have because of what's going to happen in the US in the months ahead, maybe, whatever that may be. But, otherwise, the India sector story is really going to play out in the large caps now. Because they've been subdued for a long period of time for various reasons, and flows haven't come in there. But that doesn't take away from the fact that there won't be opportunities in small caps and mid caps. There would be opportunities, domestic flows, domestic funds, as Neeraj was saying, and his hypothesis to that extent is absolutely correct, that would flow into small caps and mid caps, because people looking for more excitement, people looking for a higher risk reward normally move in there and buy stocks. Concept stories, investors like us who have a much larger risk appetite would go and look for our next 2x, 5x or 10x there. But I think the index performance vis-a-vis the mid-cap, small-cap index, you may just not be surprised that if some of the index stocks give you much larger returns, not taking away the opportunities from the small caps, but.
Okay, Sanjay, stay on. We're very close to the open rates. We'll get into some final thoughts from Sanjay after the markets open, but let's give our viewers some flavor of a trade as well as an investment, as the case may be. And let's get in the top idea from our technical experts before we kickstart trade today. And CK, if you had to bet on one stock today, is it a trade or is it an investment, and what is it?
Well, I think I would buy into a Colgate-Palmolive, which could be a trade as well as an investment. If you look at it, recently results came out which were pretty good. I think if you look at the charts, they have been building up a nice pattern for quite some time. So the recent results could, kind of buoy up sentiments and keep the traders happy, whereas the longer term picture is very steadily on the mend, and we are awaiting a breakout above 1000 for some long term investment plays also to actually eke out here. So I think from both a trading as well as investment angle, I would be a happy buyer in the stock of Colgate-Palmolive at the current prices.
Colgate. So Kunal, your top idea for the day?
Well, I would want to pick two stocks, Neeraj, instead of one. Syntex Industries, I'm extremely bullish on the stock. Good, short-term charts. So would look at a target of at least 100 and a stop loss at 85. And the second would be a buy on sale, Steel Authority of India. Again, a very good chart setup, not just in terms of short term, but even on weekly, monthly charts as well. Would look out for targets of at least 64, stop loss 46.
And Siddharth, your top call?
So I'll suggest to buy Jet Airways. We have seen 2 to 3% correction in crude oil prices overnight, and stock is consolidating in a narrow range. We have seen last expiry there was some formation of longs. Expecting stock to move higher, probably towards 510. Stop loss 428. Other stock which I am liking is Muhurat Pharma as well. Now there, I don't have very aggressive target price as of now, but 990 is what I'm expecting. Stop loss of 810. This can be a stock which can give you a great returns in next Samvat.
25 seconds to go, and then we'll get the first rates for a new Samvat. And for those who've just tuned in, well, here's wishing you a very happy Diwali and a very prosperous new year. Well, the importance of Samvat trading also ties in with the fact that historically, as per the Hindu mythology, this was also the beginning of a new year at Bombay Stock Exchange. So it also ties in with that. When it comes to the activity today, it's all about that feel-good factor. You may just buy a token amount of 1 or 2 shares. The family members, they come in, they punch in some trades. Institutional investors are not going to be there, and today is also a Sunday. So we may see some token move. There are 73 Muhurat ideas for you, which ET now is bringing out. And the first rates of a new Samvat here on your screen, it's a green tick. They often say that well begun is half done. So maybe this could be indication of what lies ahead for the rest of the year. 38 points up for the Nifty, 140 points up for the Sensex now. So we are off to a flying start, at least on benchmark indices. In terms of the small cap index and the mid cap index, the trade is going to be slightly slow and low. So you may not see too much of price action and even in volume action. So today you should really either focus on large cap stocks or some rank mid cap stocks. You may not see a whole host of new trade happening, at least in the tiny toons of the world, so to speak. The bank nifty is not going anywhere, but the nifty is still holding on 26 points up for the bank nifty, for the nifty spot.
Considering how critical it got to actually latch on to 8600 just last week, it's good to see at least Diwali we're comfortably above that mark, in fact above 8650 as well. We've been in that range for quite a while now. It's actually IT which is quite a winner today. So you've got a Wipro, you've got HCL Technologies which is actually topping the charts right now. Infi as well holding out in the green. You've got an iShares, Bajaj Auto, Asian Paints, Lupin, you've got a Bosch, Sun Pharma, ICICI Bank. These are a couple of winners. And just 2 ticks in the red for DRL as well as Tata Motors. And this is 2 not by a huge margin. Just about scratching that red line really. And now you've got a DRL, HDFC Bank and Reliance which is charting absolutely flat. But again, a very tempered Muhurat day, which typically is the case on most Muhurat days.
Yeah, that would be the case, and let's hope that this doesn't end up on a lower note, because the buying happens in the first 15-20 minutes and then some smart guys come out and maybe even sell. I don't think the volumes will be too high as well. Just trying to see a few stocks which have had a really good run the last few days or have been active the last few days. The tire names, for example, will come up on your screen. Just trying to see if any of Seat or Apollo or a few others are active. No, not quite. Subros is very active, 10% higher at 179. So that one, after a fabulous Friday, is up another 10.5%. Very good numbers for that one as well. So that is doing okay. There is strength in Kaplan Point of about 6%. For these stocks, I mean, these trades are okay to reckon with. Now, Sanjay, the question that our viewers, I'm sure, are waiting for as well is, where is it that they can invest? Views are one thing, and we'll get to know the end of this time next year as to what some of these individual pockets have done. But what are you doing? Are you investing in gold, which has had a 17% return, or are you investing in equities, lock, stock, barrel right now? And if so, what are the themes, what are the pockets, what are the stocks that you're targeting?
I think I've been an equities person, so I would stick to equities right now. And equities as a class, definitely in the next 3 to 5 years, are going to give much better return than any other financial asset class where you put money. Of course, with the caveat that, as a portfolio investor, as someone who's investing money, you must diversify into all asset classes depending on what your risk reward and your age, etc., and those issues are. But coming to specifics, I think, looking at some of the large caps, pockets like financial services, I would today break away from my regular rule of going into specific stocks. I would look at a Reliance Capital. I think there's a phenomenal value unlocking potential in there over the next year or two. In metals, I would look at steel. I would look at something like Tisco. All this noise about the Tata episode is probably going to sort itself out over the next month or two. And similarly, I would look at Tata Motors. I would look at Infosys, be a contrarian at this point of time, because I think their a change of strategy, they're coming on the path, and the fact that valuations are reasonable right now would give good returns from the current levels looking at large caps. And of course, my disclosure here would be that at this point of time, I don't have any positions on any of these stocks. Like I've always been saying, that I'm a small cap, mid cap kind of an investor who looks at ideas there. In the large caps, I think even some 1 or 2 select pharma names, normally I don't recommend them, but something like a Cipla looks good, excellently managed company. Things are on track. It's corrected reasonably well in the last few weeks. These are the kind of pockets where you can comfortably invest in, and banking has been my favorite for quite some time. You can look at there also. So primarily these 4-5 stocks I think would outperform in the next year or two ahead. The earning cycle is turning now. At least worst is over. What we can make out from this quarter, we may not actually come out openly and thump our chest and say that earning cycle has turned, but I think the worst is over now. So in this backdrop, these 4-5 specifics would give good returns to investors. Obviously, carry on your normal SIPs when markets fall, buy more of these stocks. And in individual small stocks, mid-cap stocks, there you need to do a lot of homework, because like I said, that's a crowded trade right now. you need to really struggle to find good ideas there and remain invested. And their investment framework would be probably time frame would be much longer than what would be probably in the large caps to get returns.
Wow, Sanjay. I don't recall the last time we got so many ideas from you. It really is a special Diwali, isn't it? Thank you so much for taking the time out, Sanjay, and really being so supportive of Team ET now all through these years. That's the view then from Sanjay Dutt from Quantum Securities. Let's take a very quick break. Haven't done that in a while. With news that the Mahurat trading day is okay. We're still holding on to the green. I can't say by a huge quantum, but we're clicking by with that 8600 mark. And yes, better a day for the broader markets. The small caps are taking the lead. Quick break, and as we do that, let's also hear it out from Shankar Sharma, what he's betting big on for Samvat 2073.
I liked Zee Telefilms, and that's done very, very well because, for a long time it was kind of underappreciated. But I think what Subhash Chandra has done, in a lot of senses, it's almost like the Indigo equivalent in the media space where people have been struggling, but particularly the electronic media part, right? We all know it's been a big, big challenge, but they have managed to reinvent themselves, and it's a pretty global company now. So I think, and the stock is now beginning to reflect that. So I like that now. That doesn't fit into any broad, because media itself is a very small sector in India, and particularly in the listed space. So those kind of oddball plays in large caps we have found. But I can't find anything which is so deeply undervalued and the market is missing a big recovery.
You mean Tata Motors at 500?
I think it's good.
We've discussed United Spirits in the past, and against expectations, despite the Diageo takeover, the stock is available at a price where it is lower than the Diageo open offer. We've discussed this one in the past. Is there money to be made in liquor stock, especially United Spirits?
That I don't know, because I mean my real fear is this whole liquor ban thing. And many people say it doesn't matter or it won't happen and all that, but I'm not so sure of that. And there will be, around 2018-19, many states will go to elections, because they get bunched around the Lok Sabha time. So you never know how many more states jump onto this bandwagon, and whether it translates into real sales hit, we don't know, but the sentiment gets hit, and I think that's one of the reasons why the stock isn't doing well.
If I talk of the big picture for metals, the big picture is the following. China is slowing down. There's surplus capacity in the world in every major commodity, and demand is going to be low. But despite this common consensus view, metal stocks and metal prices, they both have done very well from the recent low.
Yeah, that's the way markets are. Everybody had a view. Everybody was right on that view for a couple of years. One fine day that view doesn't work, so it stopped working. I don't think metals are bad now. I've been bullish on it all year.
February we had interaction. You said buy metals.
Exactly. So stocks have done well, and I think it was excessive pessimism. I think with some degree of recovery in emerging markets, the sentiment for metal commodities is generally more positive than it has been in the last 5 years. It may well be only a technical, move. I don't think there's a big resurgence in the demand. But I think at the margin, things are not that bad. And when you're beaten down 80% in commodities, then all you need is just a lessening of pessimism, a lessening of the bad. You don't need actually real good news. It's just lessening of the gloom, which is enough for you to make 100%.
So awful has become bad, but awful has not become great.
You don't need that to become great to make serious money.
So what is awful and where awful could become bad?
In my view, what is not awful yet but could become awful are some of our large caps.
Okay.
Were clearly fatigued, and I think there's a whole churn that is going to happen over the next 4 or 5 years when many will move out and many new sectors and new companies will come in, and that transition is always painful.
Have a good time at Diwali, make your investments and then enjoy yourself during these celebrations.
I would like to wish all viewers of ET and all Indians a happy Diwali and a prosperous and contented New Year.
Wish all your viewers a very happy Diwali and a very prosperous New Year.
Happy Diwali to all of you. May you have a very profitable year going ahead.
Happy Diwali to all our viewers once again.
Hi, I'm Katrina Kaif, and I would like to wish all the viewers of ET Now a very happy Diwali.
All right, thanks for staying with us. And in case you've just tuned in, happy Diwali once again. Well, at Etina, we work tirelessly to bring you cracking shows in the best market as well as corporate voices. Here's a glimpse of what really transpires behind the scene and the real fun and excitement behind our Diwali programming.
And I look into your camera, Satish.
Where am I looking? Just tell me one.
Who's starting? What? Akshay. And listen, let's do a break tease also, you know, coming up after the show.
All cameras roll, please.
Yeah, Tamil will introduce all the guests.
So you start, then I'll introduce the guests.
करो यार.
Could you want to try?
No, I mean, yeah, I'll tell you what. If I price it at 10 rupees, you'll buy it. Because I'm saying it's 2 paise a litre, you're worried, right?
What was Manish Chokhani asking you to drink, Nikunj?
He offered me that pure water.
Okay.
And that, you know, invention where the company was invested in, and that claims to be really cleaning and cleansing dirty water into pure water. He is confident of it, but I am not. So I resisted the temptation of actually, you know, giving that water a sip. So.
Let's ask Ramesh if he would do that as well. I mean, he joins us right now from the Bombay
Maybe
Stock
he's
Exchange.
already seen a demo of that investment of Manish Chokhani.
And I'm sure he's read about it for sure. I mean, the amount of stuff that Ramesh reads, I think he probably knows about this and more. Ramesh, really good having you on ET Now. Thanks so much for joining in. And from all of us here in the studios, Ramesh, wish you and your family a very happy Diwali.
Thank you guys. Have a great one, and it's nice to be on your channel.
Nice. Yeah, Ramesh, thanks. Much appreciate that. So Ramesh, just before we get to what we do best, and that is ask questions on the markets, just a quick question. The talk in the studio was that there is a product that Manish Chokhani, is one of his investments, has made, which is you take water, however dirty it is, put it in a filter, even if it's water taken from a commode, right, Nikunj?
It's dirty water, let me put it this way.
It's dirty water. No, but I want to make it sound the way it is. Yeah, so Ramesh, very dirty water, put it in a machine, and then he sips the same water in a matter of 1 minute because it's apparently crystal clean. Would you dare to do that, Ramesh?
You know, I think we're going to have to do it given the fact that water is such a scarce resource now. It is free, so we don't really value it. I think over the next 5 years, I'm not sure exactly the point he mentioned, but I would be kind of bullish on companies that know how to treat water.
Ramesh, you've been famous. Firstly, happy Diwali. You've been famous for coming up with some unique ideas, spotting some trends which no one has so far. I remember Ramesh was the first one to actually spot on logistics, considering there was such a rage with online portals happening. So Ramesh, what's that one?
Ramesh, the money of 2010. I mean, Ramesh, the money of 2000 actually identified companies like Crystal, McDowell.
Yeah.
So it's a long and a very long list.
list.
I guess Infosys
I'm talking
in the 90s.
about more recent viewer memory. So Ramesh, what is that one big ticket theme that you're working with for Samvat 2073?
It's a great question, Aisha. Always, it's a great time also to think about this. Diwali, budget days, New Year's, when you spend a lot of time thinking about that. And I read a report yesterday which will give you an idea of where my thought process is leading to me. There was an analyst who wrote, I think a CIA analyst who wrote, that there are only two kinds of companies in this world. Companies that have been hacked and companies that will be hacked. And what's going to happen, that increasingly there will be only one kind of company that has been hacked once and will be hacked again. So I'm leading towards cybersecurity as a big outlook for the next few years. I think when the Bank of America chairman was recently asked what his budget was for cybersecurity, he said one word: unlimited. So I think that's an area that increasingly is frightening exchanges, banks, regulators, corporates. A lot of capital expenditure is about to take place in that sector. So I think that seems like a promising sector. There are only very few companies in India that participate in that sector. I'm sure there'll be more over the next few years, but that's a sector that I would pay attention to.
Yeah, and given the recent spate of data leaks with all these banks that just happened and credit cards getting hacked, etc., makes sense to bet big on this.
My only reservation here is that Indian companies have not been great companies in products. I mean, Ramesh would endorse that view. So can we really go beyond this mold of IT services? So far, with the exception of one or two companies, no big companies have managed to take a giant leap forward. But Ramesh, I distinctly remember a couple of years ago, we had a conversation and you famously said that, look, we are in a consumer-driven bull market. Are you getting a sense that the consumer-driven bull market is getting tired?
You know, the bull market is not getting tired. I think the consumer stocks that I used to like a lot, I would be more suspect about holding a lot of these. I'm shedding some of these. And the reason why I believe that, Nikunj, is because there are new entrants in that market and they're doing the game of disruption. So I think these high margins, high Ps of these stocks will probably be under threat. So the conventional FMCG stocks as we know them, I'm trying to be a bit lighter on them. I think I'm interpreting consumption in different ways. It could be consumption while going to a movie theater, it could be consumption in an airline company, consumption in an oil marketing company. I think those perhaps are better ideas to look at than the conventional FMCG stocks. And I've held them for a number of years in my portfolio. But for the first time, I'm a bit worried about them because I feel that the game is changing and I'm not sure the entrenched competitors are up to making the change necessary. They're perhaps living in the world they used to occupy for the last 20-30 years.
Ramesh, this time last year, nobody would have thought that metal stocks will give the returns that they have given. So it was a year that belonged largely to the unsuspecting themes coming out. Right now, people are very, very skittish about IT. Almost anybody on the street asks them a question and they don't want to bet on IT. Do you think this large sector will have a painful year, or do you believe right now when nobody is betting is the time to probably bet on them selectively?
You know, it's hard if you want to take a point-to-point analysis what it will do. Maybe there's some more downside left in technology, so maybe they'll bottom out in 3 months rather than now. I don't know that for sure, but I think the rumors of its death are greatly exaggerated. I think the world is moving to software. India has a lot of capability, a lot of bench strength. I think the model that we've all liked is the export-oriented, service-led, headcount model. Might need to be tweaked there to go more to consulting, more to solutions, more to products, more in different areas. So that might change. But it's hard for me as an analyst to write out such an important part of the economy saying it's all priced in and over. I don't agree with that pessimistic assumption of Indian technology.
Ramesh, the pond in which you fish is the mid and the small cap pond. I'm getting a sense that the pond is about to crack. Mid cap and small cap returns have been extraordinary in last 2 years. Do you think that from now onwards, when I say now onwards for next 2 years, next 3 years, there is a serious case for underperformance in mid and small cap stocks?
I've always found that because it's a very tough business to try and figure out. If you go back to 2008-10 when all the markets collapsed and mid-caps collapsed more, the general thing on your channel or on interviews was always that mid-caps will never rise again. And here they've risen too much. So, the mantra remains the same. I mean, we have to say it as many times as people need to understand it, is that it's never a bad time to buy a great business if you get it at a good valuation. So if you find some good businesses in the mid-cap space, I would hold on to them for dear life. You never know which of these mid-cap companies become a large-cap companies. As long as they're delivering, as long as they're compounding, as long as they're doing good corporate governance, just because they've gone up 2x or 3x, I would not get vertigo. That is just being influenced by price, not influenced by a business. So respectfully, I would think that you continue to do bottoms-up stock picking. And if you found a great stock, you found a winner. I mean, Bajaj Finance, for example, name a stock, is up 40x since the bull market began. I mean, at what point do you get rid of these stocks? It's generally not a good idea to base it on price. You have to base it on understanding of a business underlying that price.
So Ramesh, since you brought that up, what's your thought on NBFCs? Because it's a sector that has had a phenomenal run, but we spoke to Rajiv Jain day before yesterday and a bunch of other NBFC managements as well. Even housing finance companies, they all believe 20-25% return or growth for the next 2, 3, 4, 5 years seems to be still a certainty. Is it still a good space to be in?
I have, to be perfectly candid, limited exposure to that sector. so I'm not the best analyst to speak about them. I think there's some extraordinary companies in there like Bajaj, which I don't own regretfully. I think it's been one of the great misses of my team in this bull market. But you know, I think they are all, in my opinion, too healthy in terms of valuation. So you know, I like to buy stocks when there's a little bit of distress. And right now I'm not finding any, there's actually markedly more optimism than I would like in these stocks.
So Ramesh, I know we've extended our appointment with you. It's Diwali Puja. You got to go back to your family. So my next question will be my last question. And Ramesh, for the longest time we've interacted, you've always endorsed the importance of leadership in a market. You've said that, look, bull markets have clear, well-defined leaders. So assuming that this is a bull market which is throbbing and which is still young, we're in the second phase of bull market according to you, where do you think the leadership of the market is going to move now?
You know, it started off, of course, with tech, pharma, FMCG, and as you correctly pointed out, the baton has been passed, maybe to the NBFC sector, maybe to the oil marketing companies. You know, I like to think that it will still be led by consumption, but by a different flavor of consumption. The leopard has many spots, and I think if you interpret consumption to mean strictly the, you know, Lever, Daburs of the world, you may be disappointed. But if you slice it to look at it in various different ways, maybe it's travel, maybe it's oil marketing companies, maybe it's entertainment, I think you'll find more happy pickings out there. That seems like a sector. Consumption services are booming in India, and I think they'll continue to boom for the next few years.
Happy consumption, picking, it all gets me to your baking, Ramesh. Tell us, did the Damani family Diwali hampers have any of your famous bakes in them?
Would you repeat the question, Aisha, please?
No, I was just talking about how many cakes did you bake this time?
You're saying how many cases I broke?
No, how many cakes? Ramesh, let me
I'm
try.
sorry, I'm not being able to hear you.
Aisha is trying to ask you, how many cakes did you bake this Diwali?
Oh yeah, you've been reading your pink paper. Yeah, you know, it's kind of fun thing. It kind of relaxes me. So I've been doing that once in a while, and it's, you know, more in the nature of fun. And I'm going to look forward to watching your cooking show, Aisha. That'll be fun.
Waiting for that, Ramesh. We're waiting for a cake from you and waiting to actually shoot you while you bake.
Absolutely, we'll do it this year, Aisha, I promise you.
Okay, awesome. So get that promise on record this time around. Ramesh, great speaking with you, and here's wishing you a very happy Diwali once again from all of us.
Thanks, guys.
Well, okay, Mark Mobius, Executive Chairman, and someone who really coined the term emerging market. I mean, he's a legend. And for our viewers, well, Mark Mobius now joins us not with his market view, but Mark Mobius joins with his investment philosophy. Mark, fantastic to have you back on ET Now. Now, Mark, you've interacted with various market participants in the last 2 days, but today you would be sharing your experience on how one should actually become a successful long-term investor. So, Mark, what has been the essence of your investing principles which have helped you to make money?
I think the first thing that people have to realize is that investment in companies, in stocks, is probably one of the best ways to save and grow. Why? Because companies grow with the market. They have an objective of being profitable and of giving earnings to investors. So they can adjust their earnings with inflation and can take advantage of the benefits of growth in countries around the world. So I think that's one of the first things you have to remember. The second thing is that companies do not grow overnight. It takes time, usually a 5-year time frame for a company to set a goal and to reach that goal. So as an investor, you also must think in a 5-year time frame. Don't jump in and out of the market. Don't trade in and out. Try to look at the company very, very carefully, look at the management very carefully, and make a decision to invest. And perhaps the best way to do that is on a cost averaging basis. In other words, you say, I want to buy 100 shares of this company. I'll buy 5 shares this month, 5 shares next month, and so forth. The price will fluctuate, but over that time period, you will get a very good average price. So I think those basic principles are what you should keep in mind.
Mark, don't get to speak with you every Diwali. It's really been an auspicious one this time. But if you were to share your crux of your experience over the 3 decades with Indian investors on how to beat the market, what would that be?
I think the crux of the experience is try to think long term. Don't think short term. Many of the mistakes I have made and my colleagues have made have been to take short-term decisions, and usually those decisions are not very good. Sometimes they're right, sometimes they're wrong, but over the long term we would have been better off making a decision after careful examination, of course, and sticking with it over the long term. That pays the highest rewards. Also, we must always think independently. I remember one person said, to buy when others are despondently selling and to sell when others are greedily buying pays the highest rewards but requires great patience and fortitude. And I think that principle is very, very important for everyone.
So in your observation, what are some of the biggest mistakes investors make which hampers their portfolio returns, Mark?
The mistake that people make is to react to daily events. They pick up a newspaper and they read about something happening and they react to it too quickly without giving thought to actually the meaning of this event. I think that's probably the biggest mistakes people make. That's why sometimes it's better to buy something and then just go away. Don't read any newspapers for the next 5 years and you'll probably do quite well.
Right. Mark, so how does the investment landscape look when it comes to India? Because several investors are unable to invest abroad, so their universe is limited when it comes to India. Should they be thinking of investing abroad as well?
For India, the opportunities are incredible. There are tremendous companies in India, very smart managements, people that are capable of acting on the world stage, not only on the India stage. But also, investors in India must remember that it's a global market now. There are great companies in India, but there are also great companies in other parts of the world. So you must think globally. India will not be the best emerging market performance year after year. That never happens. So you have to be diversified into many other markets to find the best opportunities.
Right. Mark, the last question, final one at that. It's Diwali today, so what message would you like to give to Indian investors on the occasion of Diwali, which is also considered as the festival of wealth?
First of all, have a good time at Diwali. Make your investments and then enjoy yourself during these celebrations. And I believe if you are patient and do your homework, do your studies, you will do very well.
Patience, that's the key word, I guess. Mark, great speaking with you. Thank you so much for taking the time out and speaking with us today. Well, patience, that's the virtue. So just as patient as you are with your gold as well as real estate investments, just be as patient when it comes to, well, equities too.
Yeah, difficult to do, right? Amidst all of these activities that we keep on finding and seeing as well. However, just before we get in one more voice, just want to mark what the markets are doing right now. It's flattened out completely, not that anything else was expected. And frankly, yes, the mid caps and the small caps are doing a tad bit better. I think people would want to buy some of these stocks. Future Enterprises up, Gujarat Fluorochem up, some strength in Bharat, All Cargo and Century Textiles. So a few stocks which seem to be doing okay for themselves. Okay, I tell you what, I think we should slip into a very, very quick break. Come back from the break, get you some more trading and investment ideas as well. And as we hit that break, you've seen a lot of people handle $1 million portfolios, but how do they handle the heat of the kitchen? It's an ET Now special Diwali cookout with market masters Atul Suri and N. Jaykumar in conversation and in a cookout with Aisha. Here's a sneak peek.
Okay, and the cookout begins.
Oh, what's cooking, guys? Wow. That looks great. I think you need a little bit of water in there.
I'll do that.
Jal gaya.
I think बहुत गर्म.
Jix, do you need any help?
No, I'm good.
Okay, great.
So let's see what he's doing here. Wow, Jakes, are you a pro?
Not bad.
Not bad at all, huh?
You're quite the pro. So Atul, is there a special connection with spaghetti, just the way the Delhiite in me has with Rajma Chawal?
You know, I was studying in Australia and I was very fortunate to live on Bondi Beach. In
Wow! I must say you look professional, huh?
And this is, a very easy dish to do. All you need to do is cook the pasta.
This one's more
Come on, this
complicated.
is a cookout. You can't make it be like, yeah, this is an easy dish to do. I can't wait to eat it. I'm starved already. And look at that, that just looks phenomenally healthy.
And
it's
healthy
all
as well.
green.
Yeah.
And you did mention to you it's a little more complicated making this than the pasta, right?
Yeah, totally. Are you a regular in the kitchen?
No, special moments.
Special moments.
Yeah.
So what's a typical day like? What time does Atul Siri wake up?
I wake up very early. I wake up at 5:30 without an alarm.
Wow.
I'm in the gym at 6:15. I'm the first guy in the gym, almost putting on the air conditioning and the cleaners at it. I work out till 7:15, 7:30 I'm home. I leave for office by 8:30, 8:45, office by 9:15, 9:30. 11:30 snack, 1:30 lunch, 4 o'clock coconut water, 6 o'clock sprout salad.
Wow.
8:30 is my chicken and some...
When do you pick investments?
In between.
All of that.
It's 24/7, I think. Even in my sleep, it's like...
Great. But Jix, you're not as regimented about your food, are you?
I'm regimented about other things in life. Food, I'm not a very heavy eater in any case. So I have actually the only thing common between Atul and me, we get up early. Both of us do. So other than that, I couldn't find any commonality between his pitch and mine. So I get up pretty early and I'm into work most of the day. I'm a teetotaler, vegetarian, don't smoke.
Atul.
Very few vices.
Except for smoking, I do everything.
So very few vices. But I have a family which keeps the eco balance going.
Let's see what activity you're up to right now. Does it look like the pasta is almost done? Vicky, what do you think?
I think both look really good.
It's ready to be plated.
Both look really good. I mean, I could serve them in my restaurant actually.
Wow. Okay. We've got all
Are you thinking of a profession change anytime, Atul? Going back to the Bondi Beach
We
days?
set up in Goa. That's the reason.
A very happy Diwali to all our viewers right here on ET Now. And yeah, it's a very tempered Diwali. So what looked like, I mean, this is just token trade really. That's what Muhurat trade is all about. So it started off well in the green. We were clinging on to 8,600 and now towards the end, it's absolutely flat. Small caps definitely taking the lead, but come to think of it, small caps are where people have made most money this year gone by as well. So let's really try and analyze what really has gone by in the year gone ahead. And really, it's been about the broader markets. Avan and Poonam, the ladies from our research team are here. Ladies, a very happy and sparkling Diwali. Avan, you go first. Delta Corp, that's been one resounding of a winner in the year gone by.
Happy Diwali, Aisha, and to all of our viewers as well. And you said it. I mean, Diwali is the time when we all get a little brave and decide to gamble. But Delta Corp has been a stock that has been very brave all year round. In fact, stellar returns. Take a look at the 3-month returns itself. 100% is what it's made. And from last Samvat to this, it's been one of the outperformers, one of the top 5 small cap gainers as well. So it's indeed moved up very steadily, gaining close to 113%. A number of factors that you can attribute this to. Let's start off with financials. The company has continued to see very strong growth in its profits. And just to give you an example, the Q2 results came about a week ago. 620% was the kind of jump that it witnessed in its Q2 profits. So that's just proof of the kind of financial performance. They've also got that approval to start the casino in Sikkim, which was a game changer for the company, something that they were awaiting for quite some time, and that's a big boost. Not just that, in terms of gaming as well, there was the news that they were buying Adda52.com. That's a company for close to 155 crore rupees. You have marquee investors that we know have been putting their money behind this stock. And just recently, Rekha Jhunjhunwala also bought an additional 35 lakh shares in August. They started the casino in Daman, and this is going to be the next biggest gambling hub in India.
Oh, yeah, indeed. Really, well, today is supposed to be gambling day, but I guess this one has surged all through the year. Poonam, what's on your radar then?
Well, happy Diwali, Aisha, as well as happy Diwali to all our viewers. Indeed, it is Manappuram Finance. It's a gold finance company. And look at the kind of returns. It's given more than 4x returns in a year. In fact, if you look at the key fundamentals, what the management did do was they did de-link the entire gold finance business from the gold price fluctuations. They did introduce shorter term tenure products, be it of 3 months, 6 months, reduce the LTV for some of the products. Not just that, they've also diversified their book from gold finance, and they're slowly diversifying into mortgage finance, into vehicle finance, and in fact the new businesses would be forming close to 25% over FY18. Not just that, in fact most of the analysts do actually estimate that the earnings probably can even grow to as high as 40% CAGR over the next couple of years, along with an AUM growth of nearly around 25%. And look at the kind of valuations. It's trading at 2.4x FY18 price to book, and some of the analysts do have target price as much as 130 rupees to 118 rupees on Manappuram Finance. So watch out for this. We should be having results as well very soon in the next few weeks. Watch out for this stock as well.
Right, Poonam, thanks a lot for that. Let me also now bring on board Sandeep Tandon, Managing Director and CEO of Quant Capital. Along with him, one of the finest investors in India, that's Basant Maheshwari. So Sandeep has got this uncanny knack of predicting the short term and the medium term. Basant only thinks long term. But on this Muhurat today, I'm going to keep the time window constant, which is next 1 year. Sandeep Tandon, next 1 year. Where are we headed? And which stock has potential to give the maximum return?
Yeah. Okay. Certainly we are moving up only. So I think from these levels also market has potential to move up. My belief is that in the calendar year 2017 should be the most powerful year whatever we have seen in last few years. So it should be the big bull run, and what we call it the most hated bull run of decades to continue.
You know, do you know you have the most bullish view on the street? Everyone I've interacted with in the last 15 days, they are optimistic, but nobody is bullish and nobody is predicting that this Samvat year will be a grand year. Why do you think this Samvat year will be a grand Samvat year? And give me your 1, 2, 3, your top 3 ideas.
See, first of all, our theory is based on the demand supply situation. What we look at, that globally bond market has peaked out. In fact, bond market 30 years bond or 10 years bond has corrected more than 10% in last 6 to 8 weeks time. And that itself is a big move. We believe that a lot of money will shift from bond markets to equity. And I think something similar trend can happen from gold to equities also. See, ultimately, asset classes shifting happens, money will move from one asset class to other. So if I have to look at from a longer term perspective, then definitely we believe the money flow towards equity will be the maximum from a global perspective also.
Mr. Maheshwari, a very happy Diwali to you from the entire team at ET Now. And really, what is it that you're feeling about the year ahead, considering Nikunj has put this time instruction or restriction, I should say, on you? What is going to be the good, the bad, the ugly for us?
Very happy Diwali to you and to everybody. You know, Nikunj said, where do you see the stocks going up, or what do you see about the market? So market is a collection of 6,000 companies. So there will be several which will go up, several which will come down. So it really depends on what we own. And exactly my point remains the same. We have been interacting for several quarters and maybe a couple of years also. I can't see an overall bullishness around. So even if I try and become really bullish. Sometimes the Trump triumph, if I could call it, that worries me. So if Trump wins, then there's a global macroeconomic problem. If Trump loses, then Hillary Clinton doesn't like Putin, Putin doesn't like Hillary Clinton. I've never looked at those things, but for some reason or the other, the mind keeps flickering over there. So let's keep that aside, because after 6 months, we wouldn't be talking about Trump and Hillary and all that. So my sense is there's a selective market happening within the overall market. That selective market would do well. The basic market, which was IT stocks or which was the pharma stocks, that seems punctured at the top end. So you've got Sun Pharma, which is losing, you've got Infosys, which is losing. So, when you don't expect the rabbits to actually swim when the elephants are getting drowned. So you might pick up the best pharma company. But if Sun Pharma is getting a puncture, it's getting a shot in the arm for a wrong reason, it's very difficult for your odd pharma bet to do well. If Infosys is having a problem, then the software companies, even though you've been brilliant at picking them, they will always get a PE contraction. The overall sentiment would be difficult. But one space which I'm really super bullish on, and before you ask me for the 3 names, I can tell you, indicatively of course, 1 is mortgage finance, 2 is small finance banks, and 3, if you can, look at it that way, is the microfinance sector. So there are several critics in the market, but majority thinking doesn't make a bubble. Majority buying does. I don't think the majority have actually gone and bought these stocks, because their market caps don't tell you that the majority have bought them. So those are the 3 things actually.
Sandeep Tandon, the majority is telling me that there is, if not a mania, there is what could be called as a mini bubble in small and mid cap stocks. Let's be clear here. The tail is now wagging the dog. Today we are feeling happy that small and mid cap stocks are moving up, but a year from now, do you think the picture dramatically and radically could change?
I disagree with that. See, if you look at purely from a let's try to analyze what exactly has happened in 2016. Okay, the 2016 is all about under ownership. Anything which is grossly under owned has positive triggers, has surprised the market. Anything which is grossly over owned and small negative things has corrected a lot. So this is what has been driving. If you want to talk about small caps and the mid caps, particularly I like to get into the mid cap space. Yes, it made a lifetime high. But if you look at in terms of under ownership, I think decent amount of under ownership still exists. Look at how many mutual funds own these names as compared to 2007-8 or 2005-6 when mid caps peaked out. So I think mid caps rally has more legs, and I don't think we have seen a euphoric phase in the mid cap space so far. So I like to remain positive, but I am not saying in general mid caps everything, but very selective basket still looks good to me.
Basant, this is the time when everybody likes to know what should they buy into, what should they invest into, not really from a trading perspective. Tell us, share with us your top theme, your top idea, your top stock, whatever you're comfortable with.
I think, you know my ideas. I can't speak about them on TV for other reasons. As I said, mortgage finance, the companies that we own, small finance banks. I called it the Rajnikant stock, if you can. And, the third part is the microfinance space. So, the 3 different things catering to an entire NBFC space. But, that's one way of playing the rural India theme. If you want to go out of that, you can buy the odd Maruti. We don't own it. I can talk about it. There are several other companies that are doing well. Of course, they've gone up. And sometimes in the market, you have to buy the highs and sell the lows, which is very contrary to what a fundamental investor would do, because there's no one way of making money. So I've learned and realized that a stock which falls 20, 30, 40% should make you worry a little more than the stock which goes up 40%. So if a stock falls 40%, I just sit back and I think what's going wrong there. So looking at the other things, I think Maruti and the odd auto players, the large caps, those will do fine. But if you really want to make some money, I think NBFC is the space. Of course, they've gone up a lot, so you might want to buy them on a, downtake. And one thing which I think has been overplayed is the IPO theme in a negative sense. We always say it's probably overpriced. But if you just look at the last 10 months, starting from Dr. Lal, Equities, Ujjivan, Thyrocare. Of course, Thyrocare you didn't make too much after listing. Then you got the plethora of the enzyme players and those kind of stocks. They made tremendous amount of money. So look at the IPO space. Don't just become blind to it. I think over the next 6 to 8 months, there will be a string of companies coming with an IPO, and several of them are fit to create 25-30% CAGR over the next 3, 4, 5, 6 years. So once they come out, we should be looking at them. I don't think the IPO space should be just blown out just by saying it's probably overpriced. It's overpriced in a terrific bull market, but bear market IPOs give the biggest multi-baggers. Go back in history and we'll see Page Industries, Repco Home Finance. Of course, I might or might not have an interest. So all of them came from the IPO space. So I think the IPO space is one which investors should look for. And here, I think normal investor says, 15,000 का application लगा, मेरा application लग गया, and he's so excited about it. Even if the stock goes 50%, it's 7,500, not enough to buy a family of 4 even Diwali clothes. So think big, don't think about 15,000, try to put in more money. 50% of 15,000 is 7,500, तो 4 जन के कपड़े भी नहीं आएंगे. So think about it that way. Think big and buy, look at the IPO space.
Go to Flipkart and Amazon, Diwali sale is still on. I'm sure उसमें आ जाएंगे.
Seems like he's a brand person.
Yep.
Yeah. Maybe not Armani. But Sandeep Tandon, what's that one big ticket idea for Samvat 2073?
I think in terms of big ticket, we have been talking about what financial, well, Basant also indirectly endorsing the financials only. So we are very bullish on financial as a theme globally. Financials, energy and cyclicals. Okay, the challenge in cyclicals to find the correct balance sheet is a big challenge. So I will prefer to play one big theme will be financials.
Okay, so that's a consensus from two wise men out there. Sandeep Tandon, Basant Maheshwari. Once again, thank you for joining us today on this very auspicious day. I wish you and your families and teams a very happy Diwali from Team ET Now.
Thank you.
Okay, so that's pearls of wisdom from our experts. And since we are talking about financials, let's talk about that space. Our research team members join in to speak about, well, two themes really. One is finance and one is pharma. And the top performers out there and what are they likely to do in the next Samvat. So Tanya, let's start off with you. Financials it is, and not surprised, Bajaj Finance stands out yet again.
That's right, Neeraj, it does. And if you look at it, it's actually given a 107% kind of return over the, this Samvat to the last Samvat to this one actually. And, the stock is also about 15.4 times in the last 6 years from 2010 onwards. So that's a big, wealth creator right there. Now, what has contributed to this surge? Remember that the company has actually, been giving an AUM of about 30% plus kind of growth levels for the last 21 straight quarters. Last quarter, that is Q1, the company also declared a stock split as well as bonus issue, which actually led to an intraday gain of about 10% on the stock at that time when the stock was at 10,000 plus levels. If you look at it, it also has a very strong track record, in terms of consistent expansion. It also has a very, strong management that has been at the helm of the company for a very long time. So that is one of the, many few of the reasons why analysts are also very positive on the stock. What they say is that they see an EPS CAGR of about 37% going forward, as well as an AUM CAGR of about 33% plus to continue for the next 3 years straight. Given that, if you look at it, even analyst recommendations, there are about 25 of them. 10 of which say have a buy hold on the stock, buy rating rather, and 10 of which have a hold rating on the stock, and just about 5 say that they would sell the stock given the high valuations. So JP Morgan has a target price of about 1,120, while Morgan Stanley has a whopping target price of 1,375. And if you look at the valuation, the stock is trading at about 4.9 times the FY18 price to book value.
Okay, right, Tanya. Thanks a lot for that. And Darshan, the pharma index did precious little. There were lots of problems. US FDA 483, blah, blah, blah. But jubilant life. Who would have thought?
It's actually been like that, right?
Yeah.
The whole year it's been about these observations and blah, blah, blah. Like you said, coming in. Darshan, so what was the blah, blah like for jubilant life?
See, if you take it over a 1 year period, it's up 70%. But if you just take a look at how the counter has behaved from the July lows, it's up 130%. So clearly there is been a lot of trend. If you're looking at why the surge happened, a lot of triggers that happened. First of all, if you're looking at the issues as far as the warning letter in in Canada was concerned and the US regulators was concerned, they got resolved. So there was a recovery as far as financials are concerned, and analysts see this as because of this and now operations improving, EBITDA will again stabilize for the company. Apart from it, even if you see for the last 2 or 3 quarters, EBITDA has been fairly stable and it has been stabilizing at a higher level. New approvals, they've been starting getting new approvals, which is always a positive sign for a company which had warning letter and was not getting approval. The new approval as far as Rubyfill was concerned, that eliminated a lot of street concerns, and post that the counter did manage to rally. It is generating free cash flows on improved business performance that is there, which will bode positive for the company, and the management is saying that they are focusing on cash generation and debt reduction. So debt is going down at a very fast pace for Jubilant Life, and that is why the surge happened. Valuation trades at 16 times FY16 and 13 times FY17 earnings, which is much cheaper compared to any other pharma company currently. And as far as analysts are concerned, Macquarie has a target price of 850, Nomura has a target price of 856, and ICICI Direct has a target price of 795. So significantly the lowest target that we've got still gives an indication of a 100 rupee upside in Jubilant Life now.
Thanks a lot for that, Tanya, as well as Darshan. And now we close as well. Actually, market close. So on this very important trading session, let's take the clock back to our experts, in-house experts. They've been waiting by patiently with us as well throughout the show. Dr. C.K. Narayan, Kunal Bothra, and Siddharth Bhamre. And Kunal, about an hour of trade done. We back to where we started off from practically. What have been your observations? Anything that you would want to share? Any stock ideas that you would want to reiterate, which people can punch in right now?
Yeah, I think, on the index, we did not expect anything blowout as such, whether it was on the downside, whether, the SGX or the, pre-open, indicated. So I think it's more or less in terms of expected lines. People are trying to, maybe book out profits or maybe initiate fresh, short-term positions. So not, too much reading into, the kind of movement today. But I think overall, I believe that this market is, in a bit of a correction mode, and you might see, these phases of, odd corrections coming out. In the last, I think 1.5 or 2 months, I think from the September highs, I think there has hardly been any significant signs of rally. So in terms of the index view, it's still, extremely cautious. Maybe over the next couple of weeks, you might, see some sort of, short-term corrections, coming out. In terms of stocks, a couple of stocks which I reiterated, which I would want to reiterate rather, Syntex is looking extremely good on short-term charts, positional target of 100. And, one of the other stocks which I mentioned, the, Diwali picks, as a dark horse is Bharat Bijli. I think the stock is trading, very close to its longer-term moving averages as well currently. So that's the stock which I'm extremely bullish on for this Samvat. I believe that the stock has a lot of potential, at least in terms of longer-term chart prospects.
Bijli, well, quite rightly so this Diwali day. But CK, what about you?
Well, I think if you take a look at what Dish TV has been doing, that seems a little interesting. Nice, fairly resolute push upward on a day when markets are pretty dull, and there seems to be a fresh set of buyers who are back in Dish TV. And recent set of swing highs are now on the verge of being crossed. So looks like fresh action back in that stock, which can probably propel it towards 105 or thereabouts, currently at about 100. So with a stop set at 98, I would be a buyer in Dish TV. Second stock where there seems to be a response to recent results is in Bharat Electronics. I think we discussed this on Friday with Neeraj, where I had opined that that's a bit of a boring stock, but on a dull day, that stock is showing some signs of life, breaking out past near-term highs. So maybe another 15-20 points upside seems to be clearly there. So buy Bharat Electronics at the current price of about 1330, 15 rupees stop loss, and we can look at a possible target at about 1350, 1360.
Okay, 30 seconds to market close. Siddharth Bhamre, you want to squeeze in the name first? We'll get the rationale in a bit.
Yeah, I recommended that rocket which is doing well today. Jet Airways, it's up by 2.5% or so. That's doing well with volumes. Watch out for Lupin. Volumes are more than 50% of daily average volumes, and that stock is up. So that is also a good buy according to me.
Okay, so the two names are Lupin and Jet Airways from Sid Bhamre's end, and we'll get the rationale in a bit. But this is what the pre-open rates, or this is what the Diwali Muhurat trading session has had for us. No great shakes. 48 points down for the Sensex, 19 points down for the Nifty, but the broader markets, the CNX Midcap and the CNX Small Cap Index are up in the session today. So, well, round one goes to Neeraj. Let's see what's in store. Well, the mid caps and the small caps are doing
Only round for today? One.
Yeah, so round
Excuse
one.
me.
There are 360 rounds or maybe 225 rounds. So let's see what happens. But so for now, we started off well.
Yeah.
No complaints.
So far, so good. You've got Lupin holding out, you've got Titan holding out, Jet Airways, and Dish TV is actually one of the biggest movers within the mid-cap and liquid universe. Century Textiles is a winner today, and BEL as well is holding out. Some profit taking for some of the cement names. So Ambuja Cement is down, DRL is down, IDFC, NTPC, Marico as well are down.
You know, when we come back on Tuesday, trust me, the whole global attention will be centered around the US presidential election. We've not even mentioned it today, but you know, it's the clock which is ticking. It's the uncertainty which is coming in. I don't think you will see a big move in the global markets ahead of the US presidential, election outcome. So that's the next one. We move from week to week. We will look back and we will say, look, that was just an ordinary event, but trust me, in the short term, the verdict really matters. So a lot needs to be now, you will see a week which will be filled with a lot of volatility. We also will be in the fag end of the earnings season. Earnings season by and large has not been that strong. So once that Muhurat feel good factor goes away, we take a clean break tomorrow, we come back on Tuesday, and we could be staring at the different market, different set of global cues and different underpinnings, so to speak.
Yeah, clearly. So it's okay, we've clung on to 8600. That really has been the key takeaway this Mahurat trading day. And yeah, better a day for the broader markets. The Tata group of stocks, the usual names are something that we're going to look out for in trade on Tuesday. Remember, tomorrow is the trading off. Tata Power, Bharti Infra, Grasim, Lupin, iShares, Wipro, Axis Bank and Sun Pharma. These are names which have managed to actually hold out. But yeah, Dish TV clearly the big winner today.
Yeah, CK's top idea for the new Samvat as well. There are a few others which have done okay, the likes of Z Media and a few others. Yeah, Dish standing out. However, just before we wrap up, we kind of wrapped up trade with the trading talk. We'll get in some more names as well. But Siddharth Bamre, you were making this point about these ideas, and Lupin clearly stands out there.
Yeah, it's okay, Neeraj. We are done with the day, so Lupin was a buy.
I'm sure people will want to understand why they are buying Lupin as well.
Yeah, so the stock has been consolidating, and we have seen good rollovers in Lupin. Unlike some of the other pharma names, the stock is consolidating since last 1.5 months. I'm sensing a breakout, the kind of volumes today which we have seen. So come Tuesday, there might be a breakout above 1550, which can give you more upside. Hope that's fine.
Okay. So, Kunal Bothra, final thoughts. What's the 1 year chart target on the Nifty? Let's not get into a long explanation, but 8625 on the Nifty 1 year hence, next Samvat.
Well, I would expect it to be 10,000.
10,000 on the Nifty. Okay, that's about 20%. CK, I've heard a lot of stories about you charting out a year at the start of the year. So let's chart out the next Samvat at the start of this Samvat. What are your targets?
Well, maybe looking for a new high only sometime in 2018, not really in 2017. I think we'll pretty much stay in the 9,000, 9,100 at the tops and 82, 83 at the bottom. I expect 2017 to be a year of consolidation.
Okay. Done with the Mahurat day. It's just a token day. We've managed to cling on to 8600. Individual stocks, of course, have found some strength today. Quick break. When we come back, lots more lined up, lots more discussions on what to do in terms of trading as well as investing in the year ahead. Samvat 2073 officially begins. Back with Samvat 2073, our special coverage this Diwali. And first, in case you're tuning in just now, here's wishing you a very happy Diwali from Team ET now. And yeah, we're done with the Mahurat token trade. We've done okay. We've turned in flat, but we weren't expecting anything else as well, considering the week ahead, Neeraj, is going to have the build-up to the all talked about and much important US presidential election.
Yeah, you know, the fun and games end today and back to business from Tuesday, so it'll be really, really interesting. The first 10 days of November are going to be amazing.
You're going to be on leave.
On a holiday.
So,
so be it.
Yeah, it'll be exciting for us.
It will be.
However, yeah, go ahead.
Okay. Since we never stop talking and thinking markets, even after markets have shut, I think it's important to get some more opinion. And the IIFL view on what the new Samvat could hold in store. Let's hear out what they have to say.
Hi there. So I am right here on the dealing rooms of IIFL Wealth and Asset Management, and I have with me Head of Research of the department, which is growing very well, Amar Ambani. Amar, from the team ET now, wish you a very happy Diwali.
Happy Diwali to you too.
So Amar, talk to our viewers about what are you recommending your clients right now in terms of asset allocation. What are the themes which are likely to do well in the new Samvat?
So I think as far as asset allocation is concerned, obviously it depends on, so if I talk about equities, what kind of investment do you have in equities, or what is your current asset allocation, that will determine whether you need to take it up or down. I think we've been one of the earlier proponents of equity. I think when the markets were down in Jan-Feb was the time when we encouraged people to raise their asset allocation to equities. So I think if I can give you, for say an aggressive investor, we recommended that they be 75-80% in equities. So in fact, if you see what we are doing today at this level of the market is actually telling them to trim down a bit. So if they were 80% invested, now they maybe need to be 75% invested. But then the truth is that not everybody is 75 or 80% invested. So there are a lot of guys who are still at 30%, 40%. So clearly, even though market has gone up, there is a case for these guys to increase their allocation to equities, because we see a tremendous future for the next few years.
But you brought up a very valid point that India on average, on median level, is underinvested in equities, and by the looks of it, for various reasons, elections, US presidential risk and all of that, if the next 6 months does provide a good dip into the market, what are the areas, sectors, stocks or themes where you would recommend your clients to raise your exposure because of those dips?
So, we always believe in having a bottom-up approach, especially when, you have divergent trends within a sector, and therefore it benefits possibly some players. Like, for example, PSU banks are suffering, right? So in that you may have a contra play, but by and large you may want to be with private banks or NBFCs. So our approach is not really from a sector point of view, but largely bottom-up. But clearly as themes, what stand out, I think auto ancillary as a theme excites us. NBFCs continue to excite us. Select private banks excite us. The smaller ones especially, RBL for example. These are names that we like. Then in consumer, one needs to be very stock specific, and it depends on the company. Some themes that we clearly do not like are the ones exposed to the global economy, like metals. We do not like IT as a sector. I think there is a lot of dynamic changes happening in that space. There are client level issues. There is a complete growth slowdown issue. There is this transformational issue where digital and artificial intelligence, all of those themes are playing out. So I think these large players, these giants with 3-4 lakh employee force, will take a long time, even if they were to be successful. So from that point of view, a shareholder need not be invested in them at this point.
My last question to you is that you would like to share to our viewers the two most important pockets of the market which excites retail and China quite a lot, mid cap, small cap, compared to the large caps. What is the potential for earnings growth and for returns for all these three pockets over till the next Samvat?
So I think mid caps is clearly a very attractive space even at this point. I hear people say that if you look at historical valuations, and now mid cap is clearly trading at valuations which are far higher than what they were in the past, so the gap is somewhat reduced. But I think one is that a lot of these mid caps are coming of age. And when a company comes of age, when you achieve a certain size of market cap, say a company which was 1,000 crore a few years back and is now at 3 or 4,000 crores, you go to a next level of growth. You deserve a much better P multiple. You've had a much longer time where people have got a chance to see how the management has performed. So I think a lot of them have come of age, and therefore that statistical closing of gap is no reason for you to sell mid caps. The other thing is that a lot of these large caps have grown so big in size. Whether you take a Reliance, you take an L&T, you take a Bharti, which is of course clearly the industry itself is facing an issue. All of this, there is a big challenge for some of these companies to grow. And in fact, you would be better off possibly in a fixed income instrument. You might get a much far better return than in some of these companies. And the other key point is that the level of growth of GDP in our economy is not high enough to move the needle for somebody like an L&T or Reliance or these kind of names, because we are at about 7%, not 9%, and secondly, inflation is lower. So not just look at real GDP growth, but nominal. So on a nominal GDP growth basis, you are still at about 11% or so. So it's not kicking at 14, 15, 16%. Therefore, there is still a lot more time before the GDP growth picks up and these large caps start to participate.
Thank you very much for your time, and wish you again a very happy Diwali.
Thank you. Happy Diwali again.
That's Ajay Sharma from our research desk, live at the India Infoline trading room, or rather dealing room, I should say. That's, of course, in conversation with Amar Ambani. But also, this year, you've seen some of these faces pretty often on the channel. Purinju Veliath and Vijay Kedia, like never before, giving us some stock ideas this Diwali.
Yeah, this is a stock I have been holding for some time. Not only Tata Global Beverages, Tata Coffee, and I can group one more company into that consumer theme I am playing. One is FCEL. FCL is, of course, it has moved in the last 2 years. If you see, it has more than doubled.
But the last
Future
1 year it
consumer
hasn't
enterprises.
gone anywhere.
Last 1 year, these companies have been underperforming or have been stagnant. I am very bullish on these stocks at this point of time. At least for next 1 year, Tata Global Beverages, I think it's again at an inflection point. There are some changes. Stock has moved in the last few weeks. These stocks are moving up. Even Tata Coffee, I'm telling you, is a very, very valuable company, available at around 2,500 crores market cap today. They are 8 o'clock coffee, the brand and the business in US, and it's a very valuable company. Both these companies, I expect a 50% return in the next 1 year time. I am holding both. So
50% return, you said. Tata Global
50%.
Beverages?
Yeah.
50, right?
That's right.
Not 15.
Not 15.
Yeah. These days, if you tell people that a stock can give 25% returns, people are like, "Arey, I'll give you another tip, which is a 50% return." So we don't want 25% return ideas.
Yeah. People going by the past may not feel, this is possible. This stock did not move for last many years. So how can it move in 1 year 50%? Ho jayega.
When I bought, I knew that this company will take some time to perform, and I was expecting actually the numbers from the new vertical which they have started. That was e-commerce thing, that e-tailing thing. So that number should start reflecting in the company from December onwards. So I knew that. So that is why I am comfortable.
Okay. It's not just about equities, it's about asset allocation, and a lot of you might want to invest indirectly in the equity markets via mutual funds. Dhirendra Kumar, CEO of Value Research, speaks on his top ideas for mid-cap funds for Samvat 2073.
Happy Diwali to all our viewers. And normally, I'm being asked to give recommendations for Diwali, and I would like to give recommendations so that you have many happy Diwali for many, many years. So finances should not be planned in a manner that you just have, you can't really be planning from Diwali to Diwali. So most Indian investors haven't initiated, they have not started investing in a market linked investment. So all those investors should get started with a balanced fund. And this Diwali, start with your SIP in the balanced fund. If I have to recommend some balanced fund, I would say go with the conservative ones. Consider Tata Balanced or ICICI Pru Balanced Advantage or Franklin Balanced. These are good ones to start, and do it for 2-3 years. Be disciplined about it. You will have a lot of upheavals, but then it'll prove to be very rewarding. You'll be able to beat inflation, and you will also not get the kind of shock which market often provides. So it's extremely important to get started this way. So consider these balanced funds. If you are a taxpayer, barely able to save as much as tax saving necessary, then consider the tax saving fund. Good tax saving fund, if I have to list, Access Tax Saver, or long term equity fund, or consider the Reliance Tax Saver. Get started with anything. My recommendations don't matter as much. If you're disciplined about it, it will prove to be rewarding.
Okay, that's Dhirendra Kumar giving us his list of recommendations for mutual fund advisors, or investors rather, in the year ahead. But in case you're wondering what our research team is up to now, they're right outside bursting some crackers. Darshan, over to you. Walk us through what is all this excitement.
Healthy, wealthy Diwali to all of our viewers. Yeah, from the ticker team, from the desk team, and
wishing
research as well as
everyone a
all our
very
guests.
happy and safe Diwali. Happy Diwali.
Happy Diwali. Happy Diwali. Happy Diwali. Happy Diwali. A very happy Diwali.
Okay, and there, that's
the backbone,
Nikunj. So in case you're wondering why Neeraj and I are alone in the studio, that's the one. Or rather, he's along with the team out there bursting crackers, and we shall be joining them in just minutes from now as well.
But that's the backbone of ET now.
Yeah.
But everybody from the ticker desk to the morning desk, the production team,
Assignment, production,
the
all
guest
of
team,
them.
and the
Yeah.
ticker team, all of them out there doing something different for a change. But I think on that note, and on a very happy note, from Aisha, me, and the team that put this show together, and all the shows all through the years, from the last summer to this summer and many more, wishing all our viewers a very, very happy Diwali and a prosperous new year. Of course, as we hit that break, we do what we do best and get you the best voices, and the Diwali Dhamaka duo of Katrina Kaif and Rakesh Jhunjhunwala in conversation.
Never been such a bigger dhamaka than this
True.
one.
Take it away.
My advice, if you may not like the advice, my advice is, maybe because I have it, but money is not as important as people make it out.
As?
As important as people make it out. And I think women should be conscious of their rights. And in a marriage, in a relationship, there should not be your money and my money. There has to be our money.
But still, if we see, okay, let's say for all single girls who are, let's say, working or in college or studying, is there one bit of advice you would give?
See, Katrina, I have one very big regret in life. People like to seek advice from me with the hope that I'll give them some advice which will really make them rich.
Yes.
But there is
a quick
the
fix,
part
a
to
quick
richness,
answer.
and I don't want to be a put on. So I say, take professional advice. If I have a fever, I take a crocin, but my wife calls the doctor, my mother calls the doctor. So similarly, investing is not something which a woman, or even a doctor or a lawyer or a chart, or can really, or a internet specialist can really understand. So take professional advice, plan, right? Don't be a spendthrift, don't be a conjuice, draw balance, and marry a rich man is the ultimate advice.
I cannot believe after all the spiritual wisdom advice, that's what you are advising.
That is just no, but what is it that I can say? See, I don't give tips because tips are hazardous for health. And another reason
I think that's a great tip you gave about planning and getting professional advice and having a plan in place. I think that's a great place to start.
Good thing, and another thing is that don't be a spendthrift, don't be a conjuice.
Yes.
Draw balance between the present and the future. And one advice I'll give to every young Indian: the most difficult thing in India, urban India, is housing. So the first thing you should do is try and buy a house. That will, of course, that now creates inhibitions because you have to shift jobs, then you can't, you can't sell houses, but that is a great sense of security. But professionalize, manage, take advice, and money, and don't be, and please, although I am a shareholder in Tanishq, jewelry should be a last investment. I know a diamond is a woman's best friend, right? Not with her money when a man buys it for her. So, you must not be focused only on investing. When we were a child, let me go to what were your ambitions, your fantasies, your dreams, and they must have kept changing as you grew up.
Yes, that's you said that very right. So when I was younger, my first ambition, which I remember, was to be a stuntswoman. I was very determined that I was going to be a stuntwoman, and I know that the type of stunt as well. It wasn't just a random stuntwoman. I was going to be a horse rider. I was going to be a female stuntwoman, the people who ride horses. Today, if you put me on a horse, I wouldn't do it. I'm just too afraid. In fact, I tried recently for a movie of mine, and I realized that it's probably amongst my biggest fears. It just scares me. But when I was young, I guess that's what happens, right? When you're young, you're fearless, and nothing scares you. And as you go older, then that's when all the fears creep up and the fears start. So that was one of my first ambitions. Then I do remember having another dream, and that was that I wanted to be a NASA scientist. These are the two ones which are clear. I must have had a lot more, but these are the two ones which are very, very clear and very specific memories for me.
You love the universe and the.
But I think the common factor in both of them is I wanted to be something unique.
Right.
You know, I think that if I had to analyze it, it was something. Both of them are very unique jobs.
Absolutely.
Now it's safe to say I did not become a NASA scientist, but I mean, you never know.
And I look into your camera, Satish.
Where am I looking? Just tell me one.
Who's starting? What? Akshay. And listen, let's do break teas also, you know, coming up after the show.
All cameras roll, please.
Yeah, Tanvila will introduce all the guests.
So you start, then I'll introduce the guests.
करो यार.
Could you want to try?
No, I mean, yeah, I'll tell you what. If I price it at 10 rupees, you'll buy it. Because I'm saying it's 2 paise a litre, you're worried.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.